India's Q2 report card of its GDP growth is expected to be released today at 4 p.m. and various estimates have started coming in. SBI Research expects a 7.5% growth rate for Q2, while India Ratings and Research Indra expects the GDP to grow 7.2% in Q2. RBI, meanwhile, sticks to the 7% projection, while a Reuters poll of economists thinks that it is likely to grow at 7.3% for the second quarter of this year. Meanwhile, there are tailwinds for India. India's strong domestic demand consumption, both in rural and urban areas, seem to be the primary growth drivers, even for the second quarter of this financial year. Meanwhile, government spending has increased as the government capex has been instrumental in lifting demand. And meanwhile, Q2 earnings by corporate India also seem to be in line with expectations, with both manufacturing as well as services sectors showing robust growth. Meanwhile, there are some risks as well, and these risks emerge mostly from geo-economic factors. And of course, when you talk about the geo-economic factors, you cannot really rule out the trade ambiguity over the US-India trade deal. And then, of course, there is the challenge of the depreciating Indian rupee as well against the US dollar. So now let's try and put all this into perspective. We will talk about what is expected in Q3 and for the rest of the year later. But what is likelihood of the number being above 7% when it comes to Q2 growth rate for this financial year? We have Teresa John, Deputy Head of Research and Lead Economist at Nirmal Bang, joining us this morning. Teresa, good morning. Pleasure having you on. Help us understand 7% or above. What is the likelihood of the GDP print for Q2 to be in that vicinity?
Thank you. So I'm also expecting a 7% GDP print and a 7.1% GVA print. So this is mainly supported by the fact that you have a low base from last year, and that inflation, so WPI inflation is around 0% and your CPI inflation is just around 1.7%. So you will have a very low deflator. So even though your nominal GDP growth may not be very high, it may be just above 8%, you could still have a relatively high real GDP growth. But there is a possibility that it could be higher than 7% as well, because your manufacturing sector has done very well. I personally am expecting that your public administration and defense services, there could be relatively slower growth at around 6%, mainly because your government expenditure and net of subsidies and interest has actually declined. But there is an other services part within that same public administration, defense, other services that could grow faster, in which case it could surpass our expectation as well.
Chances of beyond a 7.1% GDP for Q2 growth print also likely to come in today, Teresa, but also help us understand inflation has been low and RBI has cut almost 100 basis points, in fact, exactly 100 basis points in this calendar year so far. And there is another 25 basis point cut expected in the December Monetary Policy Committee meet. But so far, we haven't really seen the private capex cycle take off. What is holding back the private sector from investing their billions in manufacturing in India?
So I wouldn't say that private sector capex hasn't entirely taken off, but it is very concentrated in a few sectors, not very broad-based. So you have a few sectors where you have PLI linked investment that has happened over the last few years. You have sectors like metals where now you are actually seeing some green shoots. But this is concentrated. So if you look at PLI linked investment that has happened compared to the previous capex cycle that took place between say 2006 and 2012, you had a lot of very large ultra mega power projects, very large infrastructure projects, etc. This time around, we're not seeing any of that. It is largely, the private sector setting up manufacturing facilities, for PLI linked investment. You have few metal capacities that are coming up. That again is concentrated by a few companies. So the issue is that you don't have a very broad-based private capex cycle. And this is also the fact that even consumption has lagged, particularly mass market consumption has, been quite sluggish over the last couple of years. So unless you see consumption also pick up in a very robust way, it is very difficult to see a broad-based recovery in private capex. And a lot of the infrastructure investment is now coming from the central government, which is why you are seeing a quite strong capex growth at the central level and to some extent even at the state level.
All right. And what about the journey from here, Teresa? Because 7.8% in Q1, likelihood of 7% or beyond in Q2. And then, of course, Q3 saw that major fillip coming by way of GST reforms. So does this sort of call for the need for analysts, researchers and think tanks to re-aggregate their calculation for the FY26 print for India's GDP? Because at this level, it seems fairly comfortable that India will grow at above 7% comfortably by the end of this financial year.
That's right. The Q1 print has been strong. The Q2 print, compared to earlier expectation, it will be mostly better than expectations. And even Q3, because of the GST cut, there is a tailwind there. Although the tariffs are also acting as a headwind, but most people have already recalibrated their numbers upwards, including us. So we were at 6.5% for FY26. We have now taken it up to 7%.
Right, and Q4 is likely to also be strong in the advent of the US-India trade deal finally getting stitched, hopefully next year, if not by end of this year.
So the US-India trade deal coming through immediately, there may not be the benefit because there has been a lot of front loading of exports that happened in the first half of the year. We are actually seeing the impact of the tariffs only from the October trade number. So even if you have a trade deal, say by the end of December, it may not come in the first 2 months, but eventually going to FY27, that will be a positive.
All right, Teresa John, let's leave it at that for this morning. Thank you so much for your time, and let's see what that final Q2 GDP growth print happens to be at 4 p.m. today. Of course, we at News9 will bring you that story as it unfolds.